Hey, folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, April 11th, 2011. Well, first things first, folks, let's discuss what's going on in the markets today. A very quiet volume day, but there is some action in the markets. Number one, you can see the markets opened slightly to the upside today and pushed higher. The initial push was the high of the day. Once that was in, the market started to come back in, and we have now turned slightly negative on the S&P 500 today. The S&P 500 is down about 1.5 points, NASDAQ down 8, but the Dow Jones Industrial Average is bucking the trend, up 17 points. Now, why is the Dow up today? Well, the Dow is up because the Dow is only made up of 30 stocks. The S&P 500, well, the name says it right there, 500 stocks as opposed to 30 stocks. So the Dow is going to be a skewed index, and that's why you always want to take the Dow with a grain of salt and focus in on the S&P 500 and the NASDAQ for the tech sector. All right, the stocks in the Dow that are having good days today, Hewlett-Packard, 3M, and JP Morgan right there. There's a couple others that are doing well as well, but those are just three to give you a sense of why the Dow Jones Industrial Average is bucking the trend today when the rest of the market is lower. Now, the key today, why the market reversed, is very simple, and it might be a little confusing to some of you when I say it, but I will explain. The answer is oil. Now, you might say to yourself, well, I don't understand why, oil on Friday was shooting up to 113 plus and the market sold off, but now oil is going down sharply today, reversing that entire move, and the markets are also coming in. So how does that work? I mean, why are we seeing this? Well, I'm going to explain it right now. The oil trade for the markets is perfect when it's slow and steady. Slow and steady wins the race, right? The markets love oil, and let me put up the USO chart right now for you guys to take a look at. When oil creeps up 5, 10, 15, 20, 25, 50 cents a day, the market's okay with that. The market does not like what we call an oil shock. An oil shock is where it goes up $2, $3, $4 and makes new 52-week highs every single day. The reason why the market doesn't like that and was selling off on Friday is because that causes demand destruction for goods. So, all of a sudden I go to the pump to fill up my gas tank a week after I did last time, and I'm like, oh my goodness, $4 plus gas. I can't go out to eat tonight. I can't buy that TV this weekend. You know what? I got to just relax a little bit. I can't believe I just put $75 into my gas tank. And that's the fear there. When it goes up that quickly, people start to freak out, consumers will stop spending on goods and services, and the economy slows down. So that's the negative when you have a drastic spike. If I go to the gas station last week and I paid $3.75 per gallon, and this week I'm paying $3.77, that's dealable. That's not bad, folks. A penny or two more a week, you don't notice that in your wallet as much. Now, over the course of time, if it goes up that much, of course, you find the effects of it. But believe it or not, human perception doesn't pick up on, okay, well, I just had to spend $1 extra in filling up my tank on gas. It's more when you have to spend $10 more this week than 2 weeks ago. That's really where it starts to hurt, and you start to say, wow, I can't believe I dropped $75 into my tank. So, again, sharp moves up in oil are negative. Small moves up are good for the market. The reason why small moves up are good for the market is because Chevron and Exxon, which are two major components of the Dow Jones Industrial Average, and in the S&P 500, ConocoPhillips, there's a bunch of other stocks that are oil-related and energy-related. Those will go up, and those will keep the indexes up on small moves. Large moves overpower those type of stocks, and you'll see the market come in. All right, so that's one thing to watch here, folks. And again, sharp moves up are negative, small moves up are positives. And obviously, when oil falls like it is today with a big drop, that tells us that those stocks like ConocoPhillips, Chevron, Hess, Exxon, I could go on and on. Anything energy related is going to be selling off today, and that's why the market is coming as well. So interesting to note here on the USO, the sharp move to the downside, right to the 200 moving average. All right, right to the 200. And that's a bounce play. There should be no trader out there that's followed me or in the money stocks at all that shouldn't be looking to buy the USO right there. That was a perfect buy. It bounced basically 30 cents. Easy scalp on a $44 ETF. Easy. And again, the low there was 43.80 or so, and then the bounce took us right up to 44.15 on that. All right? Now, taking a look across the board at a couple other things, let's just note here the UUP, which is the dollar ETF, basically flat on the day. This is almost a non-event for the day. We've seen the dollar getting crushed of late, but of late we're not seeing that, or at least today we're not seeing the dollar going up or down that much, up a penny or two for the course of the day. If we look at the chart of, let's take a look at the GLD. GLD is selling off just a little bit. Small bear flag here starting to come in, and you can note that. All right, and we'll just take a look at a couple other things here. I want to note silver. I think silver is very significant. All right, silver is definitely on the significant side here because it's reversed off major gains. Friday was a huge move up, but this reversal today, folks, could be something to watch. I like the fact that this SLV pierced $40. All right, it pierced $40. And again, this little sell-off in the mix right now could be something big as it pulled back to the negative side. Please note here the high of the day was 40.33, and the reversal to the downside is now down 23 cents on the day at 39.60 to 65. And again, I'm watching very closely on this SLV because there's a very extended daily chart. I mean, look at this chart. It's up more than 50% since February. February SLV, which is silver, is up more than 50%. All right? And again, just something to note there. Keep an eye on. Heavy volume today too. It's look at the volume. It's only 2:25 p.m. right now, but the volume on the SLV is almost as high as the highest days this year so far. That could be another reversal signal of kind of, I guess you would call it distribution at the top or some sort of effect right there where you're getting a heavier move in volume. So watch the SLV, guys. It is something that I'm paying attention to. Now, a couple other things to note here. First of all, we talked about Exxon and Chevron. Remember how those are big components of the Dow Jones Industrial Average. Chevron is down over $1 today. Look at this sharp sell-off as oil has come in, and that's really why you're seeing a lot of the market getting hurt today. As you're seeing a sharp decline. And again, by no means is the market down much. In fact, the Dow is still positive. But you are seeing oil on the negative side today impact the markets to the downside, just like on the positive side on the short move on Friday, it actually hurt the markets a little bit as well. And it's very interesting to watch this market because you have this sweet spot in oil. As long as oil kind of stays neutral to slightly positive, the markets are loving it. If oil goes up too much, it's bad. If it goes down too much, it's bad. And again, you can kind of see how that's working on Friday, and then today, it's the opposite. If you go back to the USO, you can clearly see that the move up on Friday was drastic, and we've reversed the entire move to the downside and gone back essentially to gap fill or a little bit below right now of that whole entire move on Friday. And I think that is very, very important to note. All right. Let me just scan through a couple other things here. IBM is flat. Apple continues to be so weak, so unique here. I know there's Apple's getting removed or rebalancing. Essentially, it's rebalancing going on with an index here, and I think that's part of it. But you can't deny the fact that the buyers have just stepped away from Apple. This is not a healthy chart. Look at this. This high pivot right here, and this is a lower high pivot and a lower high pivot. That's a lower high signal is a very bearish signal for any chart. And you have to continue to wonder, is Apple going to break down? I'm not looking for Apple. I'm not going to touch Apple until it gets down in this range. Pivot low right here, 200 moving average. If you get Apple down there, I might be semi-interested in picking it up. But again, the whole thought process is Steve Jobs has left. Competitors continue to be on the heels of Apple. I mean, remember when the iPod came out? It took like literally a year or two for any decent product to come up. But now they did the iPad, and then literally within a month or two, there were competitors with iPad-type devices right out. That's what happens. Everyone starts copying the leader, and it actually hurts the leader because they're going to start. It's margin pressure. Margins, profits are obviously going to drop because there's competitors trying to get in, and all these kind of like little effects come into play. And I think that's what's happening with Apple. It's kind of like everyone tries to take out the top dog. All right, so in any case, something to watch there on Apple. I can't, it's pretty crazy to think that the market, again, this stock has not been up now for many, many straight days. Even when the market was rallying last week, Apple Computer just continues to sell or be flat on the day. All right, so we'll watch that and continue to see how it plays out here. Goldman Sachs is trading up about $1 on the day. JP Morgan is also higher. One thing to note here, folks, make sure you're following me on Twitter as I tweet live throughout the day, and in the evenings, anything going on, I'll be on Twitter. You can follow me, Gareth Soloway, on Twitter. All right, so again, I encourage you to follow. In fact, we're doing a little bit of promotional game event for a free DVD of the Methodology Revealed DVD. You can get it free if you call tomorrow's close on oil correctly. But again, just a reminder here, you have to be a follower on Twitter of me to be involved in that. So I encourage you to go and try it out. Come follow me and be involved. All right. Other than that, folks, again, today the story is silver. I think silver could be a significant reversal. We want to see how it closes. If silver closes to the negative side and continues lower tomorrow, I think a little bit of a top is in on silver in the short term. Oil looks like a big reversal, big engulfing reversal. If you go to the daily chart on the USO, folks, this is a very big engulfing reversal candle on the oil chart and could be something very, very significant as well. All right, so we'll keep an eye on that. So these are the keys that you're watching. Market, again, is flat to slightly negative. Volume is very, very quiet for a Monday. Over the weekend, there was no major event. There's talk that Gaddafi wants a ceasefire, but he said that before, so who knows? I think that's partially why oil is pulling back, though. Looks like the rebels rejected the ceasefire proposal because Gaddafi would remain in power, and that's what they want. They want him out of there. In any case, the Middle East craziness is not spreading at this time, and I think that's a positive for a bring down in oil or a pullback in oil. The government shutdown was averted on Friday. That's a small positive, although that can be argued either way, as the last times the government has been shut down, the market's actually rallied significantly, so go figure that one out. And just scanning through my news here, that's about it. You know, it's a Monday. Come join us at the Research Center. Remember, there's a free trial offered at inthemoneystocks.com. You want to get involved there and make some money with us using the free trial of the Research Center and Intraday Stock Chat. Take care, guys, and I'll talk to you tonight in a nightly video inside the Research Center.